welcome out to the halftime report. It is June 6th, 2019, 75th anniversary of D-Day today. So some remembrance out there. We got myself, we got Coach Emily and Coach Mark joining you guys today. I'm not even asking Mark how he's doing. Emily, how are you doing?
I am doing wonderful, Cody. How are you?
I'm fantastic. Absolutely fantastic, actually. And Mark, you're here.
I am playfully combative today. Playfully combative.
Okay.
So get ready to argue, Emily, about everything. I don't even care if I believe in the side I'll argue. I'm going to take the opposite side of everything said and try to make a trading case for it.
Oh boy, this is going to be fun. You and I have never hosted a show together, so this is going to be really fun.
And it's actually an exercise I like to do sometimes, because if I can't make a case, then it's a good trade.
All right. Well, the Fed absolutely knows what they're doing, and they should just start going dovish and lowering rates right now. Take the opposite position.
Well, that's the easiest softball you'll ever throw me. The Fed is guessing all of the time on what they're doing. Oh, the market's down 7%. Let's go out there and calm their nerves and throw out some crap and hope it sticks. That's the easiest one ever.
We're not arguing with you on that one. We're all on the same page with that one. No argument there.
But the important thing is with the Fed, it doesn't matter if they know what they're doing. The market buys in that they know what they're doing. And the market, most importantly, and we've seen this, sometimes over the years you hear coaches say, hey, the Fed got the market back. The Fed, blah, blah, blah. You've seen that twice this year. You saw it on January 4th when Jerome Powell shifted the rhetoric. You saw it a few days ago when Jerome Powell said, hey, we're there in case things get bad. It's one of the beliefs, I know how the market responds to that. That's why I feel comfortable selling puts on companies that I'm willing to own, because I know the market has my back. I know the Fed has my back.
And that was something that Emily and I were talking about in pre-production, is that the fact that the market is down right now 3.5% over the past 2 weeks, and people are calling and almost demanding like the Fed should do something about this. It's like, well, A, we're not even off the highs that much, and B, is that really the economy we want to build? One where we don't think it can go up based on company production or growth or the natural market factors. We think that anytime it's down, we have to have some external stimulus to the market to artificially boost it. Is that
I'm going to argue with you. Yes, that is what we want. We are a placating society. We want instant gratification. We want all of our problems solved immediately. And increasingly, we want them solved by the government. So absolutely, when the market's down 7 or 8%, we want the Fed to come in and save us. Because I want my portfolio to go up today. I don't give a damn about the long-term ramifications to the economy.
So every time we have a little boo-boo, we're going to put a Band-Aid on it, right? So it's no more let the bleeding happen. Let's just put a Band-Aid on it every time.
One day we'll pay for all that. Well, we won't pay for it. Our grandchildren will pay for it. Our children will pay for it. But, they need to learn some hard lessons in life. I want my portfolio protected today, and I'm glad that the Fed has my back.
Did y'all ever watch the show How I Met Your Mother? No?
No.
I've watched every season of that.
Okay, the part where Ted and Marshall are saying, well, whose problem that is to worry about? Tomorrow, Ted and Marshall. Tomorrow, Ted and Marshall have to worry about this. Today, Ted and Marshall don't have to worry about it. That's tomorrow, Ted and Marshall's problem.
I got my puts to worry about today. Next week's puts, next month's puts, my children's puts. I don't care about those.
Yeah, that's they got to worry about that one. And guys, welcome out as people are coming in here. Just to let you guys know, Mark decided he's going to take the exact opposite position of anything that Emily and I say, just to play the contrarian devil's advocate here. So let's begin.
It is take the opposite side Thursday.
Opposite side
Thursday.
So markets had a little rebound over the past couple of days off of the rumors of the Fed. One of the reasons it was down to begin with because of the news surrounding the trade. So a lot of different things are pulling the market one way or the other. Looks like we're kind of getting a little slowing momentum pulling back. Emily, how are you reading the S&P right now?
Well, I was prepared to go short this week, but that big old green candle like knocked me out. So I'm not happy right now. But, we always talk about this, you trade with the trend. But, right now I'm just kind of sitting on the sidelines, just letting my theta trades, do their thing. I'm not doing anything directional per se. I'm just, kind of chilling out like the market is.
All
I'm going
right.
to take the opposite side. I don't think you should sit on the sidelines, Emily. Let me mansplain something to you.
What should I be doing there, Mark?
And I am glad I'm not in a room with Emily. I get hit upside the head. All right. I don't think you should sit on the sidelines. I think you should dabble. You should dabble. Now, the trade war has taught us, and when with the Fed coming in and interjecting at any time, that quick, sudden movements to the other side can happen on news. But I firmly believe in two things. I believe that Trump has our back on the trade war in the sense that if the market gets too crazy, he has an election to worry about. He'll back off rhetoric if the trade war gets ever any crazy. And as Jerome Powell demonstrated on, Tuesday, they are not going to let this market go lower, whatever their reasons.
Yeah.
And so when opportunity arises, whether it's an Intel, whether it's a Wells Fargo, some of those value stocks, take a nibble. Be a little aggressive with some of those sold puts. Don't go crazy. Nibble a little bit.
I'll buy some shares of my kids' IRAs. How about that?
Oh, your kids are screwed. So don't do that. Your kids are screwed. Don't do that.
It's all about me. I forgot. It's all about us, right?
Thank you.
They'll worry about themselves when they're adults.
All right. Well, the S&P is really, even though this candle looks kind of big, and that's just one of the reasons, because we actually gapped down overnight and then opened. We're just up slightly. So if it had opened where it had closed, we would have actually seen just a very doji type candle. But this one's got some movement in it just because of the way that it happened to open and close. So the market really hasn't moved that much. 0.1% on the S&P 5 actually down today. So I'm going to jump straight to the Russell and ask Mark, why is the Russell down right now?
I don't offer initial opinions today.
Oh,
I
no
only
one-
offer opinions after someone else has offered an opinion. So one of you two got to lead the ball because I'm only responding today.
Oh, you're responding? All right. Well, Emily, then I got to get your opinion so he can respond to it. Emily, what's going on with our small caps right now? Why are the small caps down when the other two or other three are flat?
That's crazy. I don't know why the caps are down. They're down because they're down. We just trade with the trend. If you have your condors on, it's just time to think about hedging. If it breaks that 50, it's sitting at 1500. So wherever your June, where are they? I think we have June's on and July's on right now. I think most of us are probably like at that 1400. So not time to panic, but keep an eye on that. If it breaks those support lines, you got to either hedge or get out, whatever your trading rule is. You got to know what your exit plan is and take it from there. So yeah, not much to say about the Russell.
Absolutely.
All right, I got something to say about the Russell.
Of course you do.
Now, in our Zoom chat, Cody, I put a link, and we share that in the YouTube chat. All right. Now, trying to ascertain exactly why anything's happening any given day is always a little bit of guesswork, but we can put together some logical pieces. Every day on the commodity report, go click on that link right now. At the end of that commodity report video, I go over different positions we've looked at, but also because we have a lot of tackle traders who have a certain trade on the Russell, and what would that trade be?
Condor.
Under Condor, I get a lot of questions on that because, when those strike prices start to get threatened, the amount of questions go up. There is a direct correlation between that.
A 1-to-1 correlation.
All right, here's my best guess today. Why there's a lot more weakness in small caps, and it's not necessarily good. And I share this on the commodity report update that I do every day. That the market's open and will continue to do for you iron condor traders that don't care about gold, that don't care about oil. If you just want to check on your condor, I'll do a little update at the end of the video. What does the small cap, what doesn't the small cap index include? What have been some of the real strengths of the market? even as the market was going down? What are some things that have held up relatively well?
Well, utilities are one.
Utilities, REITs,
Your safety place.
dividend paying companies. A lot of those flight to safety, those classic names, your Coca-Colas, your Exxons, your dividend payers, your big utility companies, your REITs. The small caps don't have those flight to safety type companies. Even some of the consumer good companies are kind of smaller growth type, lesser names. A lot of your flight to safety companies that we've seen the market gravitate to. What has Coca-Cola done in the last couple months? Trade wars treated Coca-Cola really, really well. Really, really well.
Coca-Cola's like this trade war.
We've seen where money has moved in the last month since the trade war started. And it has gravitated towards these safe names, these safe plays. Small caps don't have that. They don't have that flight to safety mechanism that the larger market does. And so when you see the weakness that you do in the rut, this should be kind of concerning as a whole about market health. Because if money's just moving to safety, that's not necessarily a vote of confidence, is it? It's just trying to sit out. I'm going to put my money somewhere, but it's not exactly a robust environment. And small caps are taking the heat. That's my 2 cents on it.
And actually, I want to agree with Pearl in the chat here, where she says the RUT can be a leading index. That's absolutely true. Is that a lot of the times the smaller companies will take the hits before some of the bigger companies do. I also want to add. I was going to add to what Mark was saying that there's not many safety plays within the Russell, but also the small caps with the benefits that are coming from these hikes are going to be moving more dovish. Excuse me. They're not having to exchange their money and stuff. Most of these small caps are here, and then the trade war news with China has been going on, so that's already baked in. Mexico really hit the autos, so that took a little hit, but that's not huge in the small caps of the Russell. The Russell is just getting beat up for the simple fact that it is just that. It's the small cap companies that are affected first, and they don't get as much benefit to some of the upside of certain news or certain trade deals. Go ahead, Mark.
On the Trading Justice podcast, go to tradingjustice.com, put that link in. We interviewed David Keller. My brother Matt and I did this week. And David, fascinating interview, very bright guy. We are going to beg that guy to come on the podcast multiple times in the future because he's I don't want to throw the term brilliant out, but boy, was I impressed beyond belief with his breadth of knowledge, his analytical ability. And David on that podcast made an excellent point. He pointed to 3 factors. Go listen to the whole podcast if you want to get all 3. But one of those factors was small cap strength. And one of the reasons he's very concerned, and this, very concerned about the market health, is the small cap weakness being that leading indicator. And so go check out that podcast interview. It was absolutely brilliant.
Absolutely. Well, let's keep continuing on down the market. I'm going to try to get us done with the market skyline before we hit the hour. So we'll see if we can do that because we never seem to be able to get that done.
Emily, screw the market skyline. You say whatever's on your mind. Tell me a stock, give me an opinion.
You just want to skip. You know what?
He just wants to bypass everything so we can just have a full-blown argument.
Quickly. All right.
Yep.
I'm going to do a rapid fire through these then.
Rapid fire.
Rapid fire.
Got knocked down off of ECB deciding not to raise rates and some of the rhetoric that was coming out of that market. I can vent on and on about how I do not understand when the euro decides to not change anything and they actually have negative news in their forecasts, how that actually increases the euro and hurts the dollar. No idea. But my neutral, slightly bullish stance I had on the dollar yesterday is now completely neutral or even possibly leaning bearish because that's, a big move to the downside, but I got to see it close. So neutral on dollar right now.
All right. And let's add for the dollar. When Jerome Powell spoke on January 4th, this is an important point. To understand why the dollar is going down and why it might go back up again. On January 4th, when Jerome Powell spoke, when he shifted rhetoric, what happened to the dollar in the short term? Go back to January 4th. The last major announcement out of Jerome Powell. What did we see?
January 4th, right here. Big
What did we
drop.
see? And what happened over the next week?
Continue to drop.
When the Fed makes a major shift or issues major rhetoric indicating their actions, rate cut potential, major action, shift from hawkish to dovish, major action, you're going to see short-term volatility. You're going to see price movement in the direction of the Fed speech for the short term. What did the dollar do? Because remember, it's all relative with currency. And we know Europe absolutely trash right now as far as economic forecast. We know that. And what happened over time with the dollar after that? There's no way I'm shorting the dollar. Absolutely zero. Because what happened after the last time on January 4th? You saw price stability and you started to see kind of a meandering trend upwards. It's all relative. I mean, we're not just betting against the dollar. We're betting against the dollar relative to the euro primarily and other currencies. And those other currencies, garbage right now.
Absolutely, yeah. I mean, if I were to look at the other currencies, where's my Forex watch list? There it is. So if I were to actually click through these, so I can look at them compared to the US dollar, or I can just look at them by themselves. So that's what these symbols are here. It's just /6 and then the first letter of the currency is, for anyone who's curious. So 6E is the euro, downtrend. 6B, the British pound, looking like a little kiss of death type scenario happening here. Canadian dollar, neutral, but on a downtrend. Japanese yen, completely neutral, actually possibly an uptrend, but Japanese yen is one of the safety plays, a flight to safety in the Eastern Hemisphere. The Swiss franc, which is considered the safety play in Europe. So it's kind of on a downtrend, but also a neutral stock. Australian dollar, downtrend. New Zealand dollar, downtrend. So everything except for the US dollar is either on a downtrend or neutral. The only two that are neutral are the two other safety plays because the US dollar is the third. So with what Mark's saying is, yeah, all the other currencies aren't doing well. As a matter of fact, they're doing terribly. But I love the way you put it, is that, yeah, the US dollar is on a downtrend, still getting beaten up from what was said recently by the Fed, even though it's still on this uptrend and it's still the strongest one fundamentally. So I have the feeling and the wherewithal, since I've been trading this for a while, to assume that this candle probably will not close down here. It'll probably rally midday, but I'm going to be looking for that, because if it rallies midday, then I'm going to day trade it. So anyways, going back to the indexes, that was a little side rant of Forex there. I'm going to move on to crude.
Give a Forex trader 2 minutes to talk about the dollar, and it'll turn it into 7 minutes about every currency pair. I understand. Right. You Forex traders are passionate about your currencies. I get it.
I mean, hey, it's simple. It's easy. I have seven things I got to look at.
See, mine was a more succinct summary. All the rest of currencies are trash. That summed it up. The dollar is going to find some support here at some point.
All right. Well, tell me what's going on with crude, since you are our commodities expert here.
I've got a triple whammy lately. Bad inventory reports, the Mexican tariffs. Piled it up. I actually look at crude as an opportunity. The trading signals are awful. The recent news is awful. The sentiment's awful. I absolutely get why you would want to wait for a classic reversal signal, because all of that stuff is bearish, bearish, bearish. But once again, it goes to philosophical fundamental principles. I believe Saudi Arabia has our back. I don't believe Trump will let the trade war get out of hand. I believe the Fed will do what it has to do to stabilize and keep the economy moving forward. And so while the short-term signals are terrible, while the short-term sentiment is terrible, those big fundamental factors, just like you saw at the end of last year when Saudi Arabia stepped up to the plate, you have so many fundamental factors working in the favor of a price reversal at some point to the bullish side. Now, if you want to wait for those trading signals, I absolutely get it. I understand. But I'm a little Wild West with oil right now. I keep selling naked puts, increasing my position. So
are you selling them way out like Gino, or are you selling them somewhat closer in?
I'm doing it on USO right now because I like to use examples where the most people can take advantage of those, and not everyone has the trading capital to do it on crude oil futures. So I'm doing it on USO. I'm doing it at USO. So
you're selling down in the 9. You're selling more like $10.
I'm not getting anything for the 9. You know, I sold another naked put at 10. I'm willing to own up to 100,000, not 100,000, 1,000 shares of USO, and you know, just slowly building a position as it drops. You know, I'm not afraid of commodities when they drop, when I believe in the fundamental factors. Just like when gold was dropping a couple months ago, I said the same thing, and people were like, "Well, it's going down." Well, yeah, but when you have on commodities, when you have this huge fundamental picture working in your favor, it has a way of playing out for you almost every time. Almost every time.
One of the craziest things about, you know, going along on something like USO. USO isn't going to go bankrupt. Oil will never be worth 0.
I completely agree. My first commodity.
Oh wait, then I disagree.
Oh.
I changed it. I'm shorting USO. No, I can't. I believe in that fundamental.
My very first commodities trade was USO. This was back in 2015. I was, you know, talking to Matt, and I was like, you know, I don't own any commodities. Which one should I start with? And he said, start selling naked puts on USO. Do 10 deltas. And I did it from 2015. I got assigned on some, and some I never did. But I've been doing covered calls on USO forever. It's one of those just things that I do with my eyes closed. But, you know, you got to draw lines at those support levels. And when it went below 11, I bought, you know, put options on it just to hedge. So, you know, it's one of those things. Yeah, I'll keep selling naked puts if I get assigned. All right, no big deal. Just do covered calls and, you know, and just.
That's the thing. I only have naked puts. I don't even own the shares yet to start selling the calls. I want a cash flow on both sides of it. I'm excited for that for a couple of weeks to do that.
Yeah, well, I mean, it's been down this level before. I mean, when you go back to 2015, you know, it was probably around the same price, if not lower. But yeah, I was doing naked puts, got assigned, didn't worry, didn't panic, and started doing covered calls, and you know, it's been that way ever since.
I mean, and here's the thing: it's not like you're selling naked puts and starting to enter positions on USO when oil's at $100.
Right.
You know, you're already selling naked puts when oil's at a depressed price. So, I mean, if oil was at $100 and way up high, I wouldn't do that strategy and wouldn't look to initiate because you have so much risk to the downside. But you're already selling naked puts at a really reduced price historically for oil as a whole. So, but if you want to wait for classic reversal signals, I get it. I'm just a little bit of a gunslinger on this subject right now.
So if we're keeping track, this is one that we all agree on.
Oh, all right. Okay, we all agree.
Well, then it's guaranteed. Oil's guaranteed to go to $32 then if we're all agreeing. Oh. And you know what I'll do at $32? I'll buy more. You know, I have a maximum amount because whether it's oil or gold or Match.com or ExxonMobil or whatever it be, there is a buy rule in my account. I don't go beyond a certain percentage of my overall portfolio on any one given trading or investing instrument. That's just basic management.
Now, the way that you said that, especially with oil, I've heard Gino say this 100 times over the past 4 years, is a lot of your larger funds that look at oil and look at oil futures, their key number to start looking to buy is $50. So when you're looking at the futures part, so like Mark said, you know, he has his numbers. If it gets to 32, he's like, I'm going to buy more. He's like, he already knows where he's going to start buying and he knows where he's going to wait for a better price. So do your big funds, and they usually use the actual futures contract to do that. And $50 is around that area. So we're approaching that zone, and like Mark led off with, is let's look for the reversal around this area to then go long on oil.
And here's the key thing. Let's say I'm wrong. All right. Well, only a certain percentage of my portfolio, which will still be cash flowing a little bit, will be impacted by that. Now, I've had a good track record in 2019. I haven't missed on any positions yet, but eventually I'm going to be wrong. When that occurs, you just don't want to have your whole account or 50% or even 25% of your account in any given commodity or any given stock. I just believe that's irresponsible because you're putting your fates into one thing. And I don't like to do that. I like to spread out that money, a little bit here, a little bit here, take advantage. Don't let one trade or one position ever ruin your trading gear. That's just don't do that. Don't gamble.
Absolutely. And real quick answer the question in the chat, Steven. It depends because futures contracts actually have expiration dates, unlike your ETFs, which is why we teach a lot of our students to trade USO and not the actual crude light futures contract. So if you were to want to trade this directionally, I assume you already know about all the leverage and everything, but because of the expirations of futures contracts, you want to go as far out as you feel comfortable with, knowing that you will have a little bit of time decay if it's not moving in your delta direction. So quick answer on that one. Moving on to natural gas, which broke down last week. And this thing's, for the longest time, we kept saying it was not tradable because it was in this range. It broke on Friday with the market.
That's multi-year support level it broke. That's ugly. It's really ugly. So
how far back should I go out of this thing? Yeah, that's just 3 years back, and you can.
Your audio's cutting in and out for me, Cody. Is anyone else having a problem with that? Can you hear Cody just fine, Emily?
Yeah, I can hear him fine.
It must be me.
A mic right here, so I'm talking right into it.
It must be my headset.
It must be. You had your mic go out on you last night. Is the headset that's going bad?
Well, I can hear Emily fine, so
Oh. Then it's just selective listening when I talk.
It must be.
Yeah, multi-year support on crude oil breaking. Gold, this one's, let me go back to a daily chart here. This has been interesting because I thought when it started slowing down yesterday, and then we had this tall hammer type candle, or we had the doji 2 days ago, we had the hammer type candle yesterday. I'm a little surprised to see this thing up today, but I think this is also inverted to what's happening with the dollar right now. Mark's got something to say. I think he's going to wait.
I got to wait for Emily to talk first so I can disagree with her.
All right, Emily, what are your thoughts on gold so we can make Mark take the opposite?
I completely agree with Cody.
Well, I disagree with
Mark all the time, with all the time that he needs to go against you and I, Cody.
Okay, so we'll put that link to that commodity report video again, because we're going to be all over gold for the next little bit. All right, it's not a question. Our stance at Tackle Trading on gold is fundamentally what are all year long. You go back to any podcast, you go back to any show. We have pounded the table for gold going back 6-7 months. So these type of environments where it occurs don't surprise us at all. We have long suspected that the Fed would issue rate cut, some kind of, we knew they weren't going to raise rates in 2019. We've been dead set on that. We knew that the possibilities of increasing dovish rhetoric on gold, on rate cuts, on monetary policy, created a real positive. I wrote a commodity report 2 or 3 months ago. Check it out. Laid out the entire bullish thesis for gold. Not surprising. Long with 1,600 word thesis on why I'm bullish in gold in 2019 on a past commodity report, February, somewhere in there. It is just bringing in the fruits of that this week. You have an incredibly positive dynamic right now. You have the Fed and their dovish. You have a falling dollar, which is corresponding helping gold this week. You still have all kinds of worries to do with the trade war. It is just created a perfect storm for gold over the last several trading sessions. The big question is now, what do we do now? All right, do either of you own any gold right now?
Physical,
gold instruments?
Nothing on paper.
Yep. Physical, nothing on paper.
Okay, so I own on paper. and I'm going to get called out, most likely. I have a call that expires next week. I'm going to probably lose everything I have in gold. One reason I'm not going in and aggressively, and once again, you got to make these calls. When you're about to get called out on something that you want to own, there's some tough calls to be made because I can roll out. I mean, I've already rolled out once. I could roll up. I'm holding the line in the sand because of the historical resistance level. And because what we were talking about on the dollar, expecting the dollar to maybe get a little bump in the next week or two, which will depressurize gold a little bit in the short term. And we're heading into this major, major resistance level. I mean, pull up a longer time frame on gold. We're heading into a major resistance level. And so when we hit into these major resistance levels, I don't get very aggressive on my calls. I'm willing to let and this could be anything. This could be a stock, this could be gold, this could be oil. When we head into major resistance levels, I don't get aggressive in the management of the shares I own. I'm willing to let them go. Because if resistance holds, which a major one like this, pretty good bet, no guarantees, it could shoot through there and all that, but you got to make a call. You got to make a decision. So what I am planning on doing is letting my shares go and then start selling naked put again at a lower level, hopefully to get put more shares. So that is my current plan on gold. But how it responds to that resistance level is going to be very, very telling. Very, very telling, because it's no small level. No small level.
Well, on that weekly,
I love that analysis.
That was a cup and handle that I just saw on that weekly candle. So yeah, that's really, really significant resistance.
Oh, look at that!
I don't know if you guys saw that pattern right there. There's a cup and handle.
Yeah,
So
I mean,
we got the cup here.
I wouldn't be surprised if at some point this year it breaks that resistance level. I'm just like, and if it breaks, I can always reevaluate, maybe purchase shares. I'm not afraid to buy something on a major breakout. I mean, that's trading technical analysis 101. But when you have to make a decision on a sold call heading into resistance, I have rules, and I do the same thing every time. You know,
right there. I love that Emily actually took the opposite position. Mark's saying he's coming to major resistance. Emily says there's a cup and handle pattern there.
There is a cup and handle pattern.
It's absolutely there. But
that's right.
I'm going to add to
that
this
is
as
a
well.
Spirit. Opposite.
I'm going to add to this as well, though. We had one failed cup and handle here. Look at this old cup and handle.
Look at that one. Failed.
So we had a failed cup and handle that formed another cup and handle. Yep. So this an argument could be made that this is a long ascending wedge pattern.
I'm willing to bet that the cup will run over and we are going to be bulls on gold because the market will tank as it should.
I mean, here's the thing, and it's the fear of missing out that people talk about even to the upside. I mean, if I get called out on my gold, is that the worst situation? No, I make capital appreciation on the base shares. I got to keep every call I've sold this year. I get to keep every naked put I've sold this year. So every call, every put I've sold, I get the credit for all those, and I get capital appreciation. Sometimes just calling are good when you have a logical reason to do so, and then starting the process again with another naked put, sell it at a lower level, hopefully you get put, start the process again.
No, that doesn't make any sense. You need to get greedy. You need to go for all the money. You just keep going. If you're up, don't cash anything in. Keep it going.
Call are good. Start the process over.
Completely joking around.
Rinse and repeat. And that's the funny thing about trading. I didn't realize that it was just really a matter of rinse and repeating. When I got started, I was always like, "Ooh, it's supposed to be exciting every single day." No, it's Has
my gold position this year been? How much time do you think I spend on it every day?
Seconds.
Yeah, seconds in the sense that it's a blip on my screen along with other blips that sometimes blinks and I sometimes look at. Like, when you fundamentally believe in something, boy, it takes the stress out. You know, I said so many times this year, I hope gold goes down more. If you were on coaches shows in February, March, when gold was tanking. I was like, I want this to go down more so I can add more. People are just like oil is today. Well, it's going down. And it's just like, I don't care. Commodity trading is its own little beast. I love it. I love it.
Well, gold is up. Silver has been getting beat up even when gold started rally, but it's had a nice little run up. But I don't see silver to have as much strength as gold by any means, but I also own more silver than gold. And that's partly because, well, it's easier to pick up a couple sleeves of silver coins than it is to pick up a couple sleeves of gold coins. But Mark, what's your read on silver versus gold?
Yeah, no, I zero interest in silver. Silver's too tied into, silver doesn't have all of the fundamental aspects that gold does. Silver is too tied into so many industrial processes as a base commodity, which is used in the production of items. So when there are economic worries, when there are trade war worries, these things are going to weigh on gold more than they weigh on silver. And so you just don't have the fundamental backdrop to silver. You got too many conflicting things weighing on and could possibly create some instability in silver. I was hoping silver would drop a little bit more so I could do some analysis on it, but I personally don't have any interest at these levels. You know, I personally just don't. Yeah, you can trade it like you can trade anything.
All right. Well, that will conclude our Skyline. I did not make the goal I was looking for, but that's also because I ranted on the dollar a little bit and Mark went off on the commodities. So I love how the commodities guy gets onto the Forex guy and then does the same thing.
So what's the trade on gold?
This is my opinion on gold right now. And once again,
I heard Gino pop in.
If I don't own gold, which may be the case next Friday if I get called out on my shares, if I don't own gold, what I personally am doing right now is hoping that you have a very clear high base pattern form, and in between that pattern forming and a breakout of that pattern, I'm selling a naked put at a lower level to add gold.
Very nice.
So that is what my current plan is. That is what the plan I'm advocating. Still love to own gold. You might see gold pull back a little bit if the dollar rallies a little bit. Like, you know, things can't go up at this rate every day. There's going to see at some point, I mean, look at those, like that high base pattern that formed, what was it? End of December before that little breakout. Like, I would love to see something like that. I would love to see something like that. Get something really clear, really crystal clear, that if we break out of that, it provides a stellar trading signal. I would love that. But, you know, you don't get to choose what the chart does. You don't get to choose what the chart does. So I'm going to sell a naked put if I get called out on GLD. I also have naked puts on Nick and Newmont Mining that will expire as well. So I unfortunately am going to lose everything I own in gold, most likely, and just have to start the process again.
Rinse and repeat. Gino, what's your read on gold here?
What's that?
What's your read on gold here now that you're joining us?
I like your idea that it could break out, right? So you can analyze this to death or just, you know, go, hey, I'm losing too much time over value here because I'm getting paid more to work at Uber than analyzing this chart. So what I do is I say, okay, you know what? Throw a cheap butterfly in GLD. I could get in there for 23 cents. And if it does break out, you can quadruple your money. I mean, $23 and you're done. On to the next trade. So I got the 129, 132, 135 butterfly call spread. And that's just a 3-point spread. The target's 132. I actually like the 129, 133, 137 call butterfly for $33. I'm trying to get filled at 31 right now. And if I'm lucky, $30. On to the next trade, man. And if you analyze that graph, guess what you can make? If it goes to 133.
Would you like to take the screen and teach that?
Not yet.
Not yet. He's like, no, I gotta get my.
And ideally, I don't mind that trade setup if we get a little bit of consolidation pattern breakout first.
But you know what? I'm not going to wait for a trigger on that because you can't use triggers on butterflies. You have to place them during market hours.
Yeah, you have to be active on them.
Yes, I know, but the setup, not the setup itself. I just don't see gold running at this rate very much longer. I mean, it's just skyrocketed in the last 5 sessions. Like, things just don't do that. They needed time to cool off before taking that next leg as a general rule. I mean,
I got resistance at 130 and on GLD. So I just want my long leg of the butterfly to go in. So 128, 129. And I want to sell the 132, 133 so it doesn't go in the money. And
so you're betting on resistance holding?
So go ahead and hit trade. Let's set this up. Hit trade.
All right, let's do this.
And then hit butterfly, deep and wide, 3 strikes.
Gino's mission in life is to make everybody tackle trading a butterfly trader.
Right now, yes.
That is his current calling in life.
I have done butterflies after I learned them from Gino, and they have worked. So he can make me a butterfly trader. That's fine with me.
Same here.
Hey, by the way, Cody, did you see when you and I and Tim were doing the halftime report on Disney, Starbucks, and what was the other one? McDonald's.
We
All
did
3 of them.
McDonald's. Yeah, McDonald's looks very nice right now.
All 3 of them look very nice. So 22 days out, GLD right there. That's the longest I'll go out. And my target, the one I think that it's not going to hit. Now you want to go butterfly deep and wide, 3 strikes. So butterfly, you got to hit the butterfly up there. And then.
I got butterfly on it.
No, delete that. Go to butterfly where it says spread up there. Deep and wide on the bottom. On 1 month, 3 strike. Butterfly. Super fly.
Right.
Super fly.
Thinkorswim really does have some of the best trading software there is.
What you have to do in the butterfly, here's a secret, Cody. Taking you to the next level, my man.
All right, let's do it.
Turn your gamut into Mark. Not Chucky Mark, but Mark is in the stock price. There you go. Now, there's your price that you want to get filled at a penny below what it says at least. So my target is, I think 132, 133 would be a nice target. So that's the middle strike, right? I'm actually looking at the 129, 132. What was that, 23 cents?
23 cents right here.
Yeah, that's your risk, buddy. That's your risk. So go ahead and buy it, analyze it, and try to get 21. Try to get 21. Because I'm a cheapskate.
It takes me the one.
You know, and when you analyze that thing, God, you got a lot of stuff going on here. Look at you. There you go, my friend. There you go. And today's the June 6th, right?
Mm-hmm.
Let's go to Monday on your date down there, because that's the soonest it would get to that point. At least Monday or Tuesday. So what are we looking at?
Monday the 10th.
So if it does get up in that 130 area, that's where your long leg enters the trade. You've already doubled your 200% return right there. If it gets to the middle, what's the highest you make?
277.
That's the most. So somewhere between $66 and $270 on a $23 risk. Not too shabby. Not too shabby. That's the cheapest spread I would do. That's the cheapest, you know. You know why? Because if you're a beginner, you don't even need a stop loss on this, because it commissions that cost you more to get out than it would be worth. But you never do one contract. You always do 2. Because guess what? Where do you double your money? Where do you double your money on that? You got to make $22. Let's call it 25 with commissions. Where do you double your money? Right there.
At $28. Yep.
128.5, we'll call it. So check this out. Here's the system. You do at least 2 contracts. You know why? Let's say 2. So work a couple extra hours at Uber, make yourself $50. You throw on the spread. And what do? When it gets to 128.50, you doubled your money. What's the golden rule? You double your money, take half off.
Take profit.
So you take that one off, and now you have a free one. This one's sitting out there by itself for free. Now, where's 128.50 on the graph? That is definitely achievable. See that? So 128.50 is definitely achievable. That's easy to do on a breakout. So that way you're risk-free. And if it goes any higher than that, that's where you're cha-ching. But your whole goal is to make it risk-free, then to go for profit. So I might even do 4 contracts and take 3 off if it goes up.
Real quick, halftime crew. That was one of those little nuggets that Gino likes to drop, and then he just keeps talking as if he didn't just drop one. The first goal is to adjust the trade to where it's risk-free or reduce risk. Then profit. He just said it really quickly and kept talking. But that's one of those nuggets. The first goal is to make the trade risk-free or reduce the profit when you're doing option strategies like this.
That's pretty important.
That is the goal, because if you start making these trades, and when I first learned how to spread my trades out and reduce that risk, it's like the walls open and trading is just like, oh my God. Because as soon as you do that and you spread it out, you take half off. Well, now you have a free trade on that can still make profit that you don't have to look at, you don't have to worry about, let it do its thing, and you get your capital back, you get your buying power back, and you can go put another trade on to set up. So essentially you can take the same, $1,000 or, this trade is less $50. And you can basically multiply that over and over, because every time you put that trade on, pull it back off, buying power comes back, put another trade on, pull it back.
And think about the emotional process.
Oh yeah.
There's no emotion with this. You do the butterfly versus a long call. With the long call, you're literally staring at the screen all day long. Butterfly,
exactly.
Hey, go fly. Go skydiving.
It's an advanced strategy. It really is, but it is the cheapest way to trade. So 2 things. You have to either trade with a stop loss, trade with a protective put, or do a spread that's so dirt cheap you don't mind losing all of it. And that would be the butterfly.
Love it.
So
and Blake, I love that hashtag. We're going to keep that. Hashtag Gino Gems. I like it.
The thing is, what kind of trader are you? Because there's, Cody, to my day, I have students from, God, I don't know, 6 years ago. They still struggle with using a stop loss. I'm like, really? I'm all, then your personality, you need to do butterflies or cheap spreads or condors. And especially people that are in condors, they hate using the stop losses. It's just a mentality thing. You got to do that. You got to protect it. So a good friend of mine named Micah Brooks, he's an old hedge fund manager and an instructor for 20 years too. He doesn't use stop losses, and it really gives everybody the go not to. What the reason he does is he positions sizes with strategies like this where he doesn't need them. He doesn't need them. He goes, why would I put a stop loss on a $30 risk?
Because if $30 is, if that's your pain threshold, that's what your thing is, then yeah, you can let the entire trade die and not worry about it. But that's the position size is the stop loss. And
by the way, guys, what's the ATR on this?
Right here, 95 cents.
There's a thought process on people that do flies, always cut that in half, and that's the width of your spread. That's true, but never go less than 3 points wide. Never go less than 3 points wide. We did 3 points on purpose because that's the bare minimum. I see people out there on the internet. In fact, I saw this trade last week, and it kind of worked out. They were doing 1 point butterflies on the gold, and I'm like, really? And a month or 2 out, I'm like, you're not going to make anything. You're not going to, it's going to,
the odds on that are like, close your eyes, blindfolded, turn in 3 times and throw it at a dartboard and hope you're getting a bullseye.
Yeah, it just doesn't pan out. So me personally, 3 points is the minimum. That's the cheapest you can get into a fly. That's the cheapest you want to get into it. I hear people go, no, you can do a 50-cent one on the 50 cents wide. No, you can, but it doesn't work. I'd rather make some money on it. So really, personally, I've analyzed this thing to death. 4 points is great. So if you look at the 129, 133, 137, I really like that one. And actually you can, with that one, 120. Are you 4 point wide?
No, these are 3. It's still what we just set up a second ago.
Yeah, change it to 4 wide if you would. I wish they let you do more than 4. Check this one out. Go 4 strike, buddy fly right there. Boom. Everybody place this in your paper money. There you go. And do 129, 133, 129, because you actually want your long leg to be at the money. That's where it's made. Now analyze this bad boy.
Another gem, guys. Where do you want your long money? Or where do you want your
long money on the long leg? You don't want it to get near your short leg. So that's why you want to widen it. Now analyze this thing. And you're going to see got a butterfly garden going there, man. So if it goes up to 129, it's not right at your long leg. That's where it really ramps up. So you doubled your money, right? Where'd you double money at? 130?
130, about 128 and a quarter.
Yeah. I mean, that's
so
that's
a little
even
bit
better.
less than the last one. Last one we
You
had to get
got it. You double
128
your money
and 50 cents.
faster. You double your money faster on a wider spread. And the goal is to double your money faster and sooner so you could go risk-free faster and sooner. Now imagine leaving this guy risk-free open. What's the max on this one? And that's just the next week. So you almost quadrupled your money, like I said earlier. And you could possibly go to 400, which is a 10-banger. So yeah, not a lot of risk. Here's the biggest number one problem amateurs are going to do. You ready? And I already know what you're thinking out there if you're in the audience. Oh my God, I only have $500 in my account. I could do this. And
I can double my entire account.
15 of them. I could do 15 of them, right? People with small accounts, especially like 5,000 or less, they will do that. They'll go, you know what? Since these are so cheap, I could do 100 contracts. But people with huge accounts, like yours, Cody, you'll probably go in there and do 3 contracts.
Yeah, I don't do more than 5.
Yeah. See what I mean?
The butterflies that I put on over the past month, I probably had 3 different butterflies. I had one on Apple, had one on Chipotle, and had one on McDonald's.
There you go. You did the option report, didn't you? So
yes, I did.
So that's
but I've already adjusted those. Like Apple. So this is something. Actually, I texted you the other day, and I told you that I was very happy with what was happening with Apple.
Yeah.
So
I closed my Apple one yesterday.
So I took my it's risk free. So right now it's moved against what's left on with the trade, but I have no risk in it.
I took my call one off yesterday. I got in for it. Ready for this, guys? Let me double check before I open my mouth. I think I got into the call fly in Apple. I roughly $3 or $4. I got out yesterday per contract, $20. Is that good?
That sounds reasonable. That's a fair
on the call side. Now, why did I put a call side on when I'm bearish? Because it was only $3 or $4.
Because you can.
It's like this. I don't care what the trend is. It's $3 or $4. So I did the call and the put side. Still have the put side on, by the way. I'm going to go look that up while you go into that. But I just wanted to say, guys, the option report, I really stress that. Just because you can do a cheap trade, that allows you to participate. And because you're not that good at technical analysis like Mark is, or Emily or Cody. You're not that good at technical analysis yet. Therefore, you have to keep your risk low and do a lot of different trades. Because think about it. If you're wrong on technical analysis, you didn't risk that much. You can put on both sides of these for less than $50 and you're going to be right on one of them. You know?
Yeah. So
anyway, I'm just going to turn it back over to you. I'm going to go analyze what I did on Apple and I'll be right back.
Well, that's, I'm looking forward to that Apple one. Hopefully he's going to be back. We got 5 minutes left in the show.
And on that note, we're past the halftime mark where we usually say give us a like and a share. So I'm gonna be Tim today and say if you're enjoying what you're seeing, if you like those little Geno gems, give us a like and a share. If you're rewatching this, comment.
I love it.
I'll throw in a c'est la vie for Tim.
Emily, do we have any women in trading planned?
Oh yeah, we do. We do have one. Let's see, June 20. Let me look at that calendar real quick. It's a Friday night. Women in Trading is back. We are doing it on June 28th.
June 28th. All right. That's not much time for me to get surgery so I can join.
Here we go again.
Oh, no, I hear amazing things about women in trading over there. So, of course, my curiosity is always piqued, and I have my own FOMO coming in like, man, what are they talking about over there that is so interesting? I want to be there. I want to know.
Oh, you're not allowed. Sorry, it's just for the girls.
That is, unless you register under a name, which I did the last time, and I was a female participant in the background that didn't say a word. So
we missed you. We missed the name. Otherwise, we would have booted you out. We actually.
My name was Charlene. My name was Charlene, and I was there in the background listening to you yuck it up. So.
Well, as long as you did not disclose yourself, you were fine. No, it's really fun. We have fun. We talk about guys. We talk about trades. We talk about you a lot, Mark. You obviously heard us talk about you a lot. We're trying to find you a girlfriend in Women in Trading, so we're working on it.
I'm all the
Is
dating.
the goal of women in trading to trade, or is it to find Mark?
It's to trade and to find Mark a girlfriend.
I support that dual objective.
That might be a more difficult trade.
The 9
There's a lot of
AMA
analysis going into that one.
That I support that objective. Go to Match.com. See, I'm off the dating apps right now because I'm focusing on work a little bit.
Trading. There we go. That's how we.
But I do love my Match.com. Another company I'm selling naked puts on. Absolutely believe in this company. 100%. It dominates the space. In fact, I'm going to start putting Match.com on the commodity report because love is a commodity. Love is a commodity that we can trade.
I like it. Put Match.com on there.
And they own the space. Like if you, this is what happens. And this is what I want each of you to get to at a point where you understand a subject. Now, the world of investing is huge, but there's things that you're passionate about. Find something you're passionate about in real life, outside of investing, outside trading, and start investigating companies in areas that you love. Become a subject matter expert on semiconductors, on oil, on gold, on something, or on online dating, which I have become a subject matter expert on in the last year. And Match.com owns this space. It is a growth industry in which their moat is so enormous. That term moat is an investing term that says it's really hard for competitors to come into this space. Really hard for competitors to come into this space. They own a ton of properties. Their numbers are great. I love this company. Now, even though I love this company, what do? Because I'm cheap, because I'm greedy, what is my initial entry method? I sell a put, try to get it at a lower price. Because when I have an investing hat on, it is much different than a trading hat. A trading hat on, I'll trade the signals. But when I'm looking to acquire things for my portfolio long-term, I want to get it as cheap as possible because I'm greedy. Because
I imagine that you're probably selling something down in this region or even lower, maybe down at 60 to get in. And
I had a 60 and a 58 put that are going to expire worthless here in a couple weeks.
Nice.
And
because I actually did something very similar. You and I have gone back and forth because it started with 2 weeks ago when this came up in the report, and then for me, PLNT is my company I really believe in fundamentally, and I've been doing the same thing. I've been, wanting to own this more, but it's been on such just a power drive to the upside. I've just been selling puts this entire time, and it's like, twist my arm to make $80 a put contract to buy a company that I want to own anyway.
I mean, and that's the thing.
Roku. Look at Roku. Mine has been Roku. This thing keeps running up, and I keep wanting to own it, but it keeps going up. I'm like,
I believe in Roku. And not only has Roku just been a juggernaut like this, I learned recently that they're not only making the original smart devices they have, they're making TVs and they're making content and they're making.
So what does that say about us? It says Cody likes to work out, I like to date, and Emily likes Game of Thrones. That's what this tells me. That's what this analysis tells me.
I'm about to crush you, Mark. I have never watched a single episode of Game of Thrones.
What's your favorite shows, Emily?
Oh my God. My favorite show right now is Billions. It's on Showtime.
Oh, I've never seen that.
Oh, it's so good.
Whoa.
Billions,
I've been looking
so
at Billions. Huh?
Yeah. And then my summer binge is obviously for my kids. It's what is it called? It's on Netflix now. I've forgotten the name already. Stranger Things. That's coming up this summer.
I've heard a lot of people like that.
So my kids are anticipating that. So yeah, I'm not a Game of Thrones fan.
You're gonna upset a lot of people, Emily.
I don't know if a lot of us are Game of Thrones fans anymore after the last season.
I'll upset some Game of Thrones fans even more because I got bored a bit about season 4, but I also didn't follow it week to week, so I never had the anticipation or like I was able to binge watch it. So when something would happen, I'm like, all right, next episode, what happened? Okay, so I actually started getting bored of it. So sorry, guys.
Yeah.
Well, I'll tell you, my go-to is when I get bored, throw on Deadpool 2.
Deadpool 2. That's a good movie.
I'll tell
All
you
right,
what.
Gino, we will finish up with what you analyzed on Apple. What do you got for us?
So we got the 167, 162 and a half by 157 put fly, $15. I'm putting it in 14. So we're at the
All right, let's
June
yeah,
28th.
let's work.
By the way, guys,
All right.
I was wrong on my flies that I did on Apple. I got in and out of. I actually did the call side for 3 cents. That's $3. And I tried to get filled at 20 cents. I didn't get filled. I got filled at 12 cents. So I still made 4 times my money.
Oh,
$3,
darn.
$3. It was Starbucks money. $3 turned my latte into a latte.
A grande latte.
A grande. Or no, what's the one above the
A
grande?
venti. It's the venti. The venti
there's
latte.
one. I think it starts with a T. It's like a
tall.
It's no in the in Starbucks. Whatever. I don't go there enough.
No,
it's
tall,
like,
is, tall is small, grande is medium, and venti is a large. So he turned his
wasn't there like a
tall
Trenti
latte.
or something, or like a? Anyways, I don't know.
Yeah, we'll figure it out. So
There's a fourth. I know there's a fourth one though. So I know venti, grande, and tall, but there's like a fourth, like large one out there.
I
That
have
you
no
usually
idea.
don't get coffee. You get like the berry thing, whatever. What's that?
Tivana.
I don't know. All right,
Okay,
let's build this out.
Yeah, so let's do the June 28 expiry.
All right.
And by the way, guys, I might even go 15 days out on this. We're going to do deep and wide 2 strikes. Butterfly. And after analyzing this,
Y'all notice the way he says butterfly? There's giddiness in his voice. He's like, butterfly.
Butterfly, superfly. So we are going on the put side because I'm looking for a swing high here. Now, remember, I want my long leg to be at the money. So when you look at the chart, 170 is support right there. See that? So the next swing down, I think if it takes it to the last support, that'd be perfect on the next swing down, anywhere down there. And so I'm doing the 167, 162, 157. Where's that at?
167.
Right there. A little bit higher, right? A little lower, right there.
Wait, where am I at?
167. One more higher.
167.
One more higher. 167. 162 is the middle. 162 is the middle.
Oh, okay. Got you. Right there.
Now, what's the mark you got there?
The market. Where'd market go?
I got 15 cents.
Market. 15.
Yeah, there
15
you go. You got it.
cents.
You know, I like that one. So if I go 50, I might even try to get filled at 14 cents just to be a cheapskate.
Okay.
Just to hedge off the commissions. So if it goes down to that 170 leg, like we said, what is your profit?
$43.
Is that good on 14?
14 3 times. I'm content.
Where do you double your money?
Doubling our money at 77.70.
Yeah, let's go to $20 profit because that's really commissions and everything. So that
okay. That makes sense.
Yeah, so that should be like an ATROA. So what's that? 176? So
176, which is on the chart, is a little bit lower than that.
A little bit, about an ATR and a half away. 2 ATRs. So if we get the trigger on that and the volatility and everything, and yeah, so there you go. That's a nice area to double your money and take some off. That line what you got right there, Cody, that's where I'm taking off a chunk of them so the rest are free. If it goes down to 170, 4 times your money. What's the max you can make on this spread? Oh God, you're not going to like this. What's the max you can make?
475.
Yeah, that's only $475 profit on $14. So I don't know if that's good or bad. It's the financial markets. But again, guys, why do I keep mentioning Uber? Because I ran into an aerospace guy that was working at like 5 kids, and he goes, "Yeah, I drive Uber." And I go, "What do you do in daytime?" He goes, "Well, I work at aerospace." I go, "What?" He goes, "Yeah, dude, I'm trying to build up my account. I need a lot of money to actually invest." I go, "No, you don't. No, you don't." I go, "What are you making an hour?" He goes, "Anywhere from 15 to $30. I go, every couple hours, put at least one into a butterfly. And if you nail one of them, 10 times your money, yeah, it's like 10 days of work. You don't have to work. And now he's one of our students out there, and he's on our site, and I get a lot of emails from him. He's very, very happy. And he goes, man, I never knew you can invest with very little money. He goes, I always assumed that you need a lot of money to invest.
Everyone does. Everyone thinks you got to have, these 6-figure accounts to do anything, and it's not true. I
can't afford investing. Yeah, right. If you can't afford throwing $15 at a trade that you know nothing about, you don't need to know stop losses, because if you lose $14. Okay, call it 20 with commissions. In fact, my commissions are $2 for the whole thing, so $16. You'll learn. So there you go.
I'm gonna say though, because we did say you need to do 2 contracts, so you can pull one off. We're gonna call it $40.
You got it.
So we're gonna call it $40 to get into this trade, and take one contract off, about $76 or so. So we're at a free trade, and then at that point, let the other one ride. See if it closes. If it does, you're very happy. If it doesn't,
that's the whole system right there. By the way, that's the whole system.
It's not a bad system.
Like it, Mark? That doable?
All right.
He's got to take the opposite
for a quarter, and then go sell a 124 put for a quarter. So you pay for your gold butterfly, and then if gold pulls back to 124, you can start your gold cash flow investing.
Oh, there you go.
Behind that, pay for your butterfly, play for your quarter butterfly, selling one June 21st put, expires in 2 weeks, 124, going for about a quarter. So if it doesn't go up, well, that's a good thing, because then you can put some shares. You had a free butterfly trade, you can get gold at 124. So
I like that. That's a compounding
like it
strategy right there.
I like it a lot. So you're paying for your butterfly, even though it's low risk, it's no risk. Oh my God.
Then it's predicated on you wanting to own gold, which I do.
Who doesn't want to own gold?
So get put at 124. How many people out there with gold going crazy right now would be like, I want to own gold. Can I buy it at a cheaper price? Well, that's what selling put's all about.
Absolutely.
Selling put's all about.
Well, guys, we ran a little overtime, but I think everyone in the chat's okay with that, because we got a lot of good information today. Gino,
I forgot the reason I came on, to remind everybody I'm on Cash Flow Club tonight. We'll be going over this again. What is the subject tonight at Cash Flow Club, Mark? I don't even.
Well, technically, Gino, it can be whatever you want it to be. But I think on our schedule that I put out, give me 1 second. The subject tonight on the Cash Flow Club, starts at 8:30 for pro members, is the bull put spread. Oh, wait, that's not true.
What?
Yes, it is. The bull put spread.
Okay, so just to keep you caught up, I did the naked call 3 weeks ago, then the naked put, the naked call, then I did the bull put. Tonight is what?
Tonight's the bull put.
Oh, I'm sorry. I did the cover call last week.
Yes, you did the cover call last week. Tonight is the bull put spread.
Okay, perfect. So if you guys have any,
so if you want some more Gino Gem, guys, get over to the Cash Flow Club tonight. Gino is going to be teaching.
And out of the money bull put spreads have any of them went into the money, like that have been issued the last couple of weeks?
Not because of this bounce.
It's the same things why my naked calls my naked puts keep expiring worthless. Same reason those out of the money bull put spreads keep, back and forth markets good for bull put spreads. All right, that's it.
All right, everybody. Guys.
Emily, thank you for being gracious and putting up with me.
I love you guys anytime.
By the way, that step system is awesome.
Oh, yes. If you didn't catch the step system last night, you need to go watch the replay. I guarantee you, everyone, 100% of students that stayed and watched till the end of that system, I guarantee you 100% of them, and that's a bold statement, were happy.
They are happy.
Well, how can you not be? It's $1,000 course for free.
Gino, I wasn't going to say that. I was going to maybe go watch it. But yes, the big surprise at the end of the step system, guys, was the coaches decided to give that system away for free. So go watch the webinar, go get the system, and start learning to trade in the game.
Bye, guys.
You guys are awesome.